All right, YouTube subscribers and members, we're doing a weekend market update. Kind of the second round of the update. I did an update at the end of last week that really concentrated on SPY, and I think it was Thursday, and my view on the year in general. It was a great year, and my view kind of moving forward in terms of my expectation, not a shocker, right? That I'm expecting continuation of these markets. I'm expecting a major move to come. The agenda for today is really simple. I'm going to look at the dollar. I'm going to look at yields, 10-year. I'm going to look at Bitcoin. I'm going to look at others, the altcoin proxy. I'm going to look at gold. Okay, that's it. In the members video that I put out earlier today, we looked at Bitcoin low time frame speculative paths, as well as very in-depth video into why I believe the Bitcoin miners structurally look the same as they do, or as MicroStrategy did before it made its Forex move. I'm seeing a lot of similarities from the Wyckoff, Elliott wave, and trend standpoint, and did about a half an hour video to the members on that earlier today. And so let's keep this moving. So the purpose of the first off, made a lot of great calls last year. This was not one of them. This is not one of them. Called the move here. Did not call this move at all. Not at all. Directionally was wrong on that. Okay. Did great with Bitcoin. Did great with a lot of the other things that we cover. Um, Is this over? I don't know. Here's all I'm going to say, okay? If I were to tell you back in September that the dollar would rally from, uh, let's see, let me get my face out of there, from 100 rally to 108, 109, and Bitcoin would double in that move, would anyone believe me? I don't think so. I don't think so. So the question now remains two things. Number one, is this interpretation still valid? Absolutely it is. I think this is a complex redistribution. I think, if we're looking at an A, B, C, three, big moves, inside each of those, the A, you would expect a five-wave move, 1, 2, 3, 4, 5, which we got. A B wave can be complex in terms of a triangle that I've got here. A, B, C, A, B, C, D, and then E. E wave being here, which also I have labeled as an upthrust after distribution, which is a schematic that I have up here. This is getting pretty far for an upthrust, right? This is getting pretty far. If we start closing above 109, then I really should abandon this. The only reason it's not abandoned yet is we have a trend line touch, going all the way back to this A wave. And so from an expanding kind of reverse a broadening wedge, expanding wedge type of pattern that we see in these reverse triangles, that's still valid in A, B, C, D, E. Okay, so the question ultimately is if number one, it didn't matter, right? The dollar had no effect on Bitcoin or the Nasdaq being up 17% from that same point. But what happens in an environment where if I'm right here and this move is towards exhaustion, we 1, 2, 3, 4, 5 wave move to the downside. What happens there? That's what I think is so exciting about potentially this next move is it didn't matter here. So, and I don't ever make any decisions based on the dollar. I find that uh, the correlation isn't always there, and there have been periods where the dollar is ripped and the market's ripped. And there's correlations on this flip side correlations where, in fact, they go the opposite direction. And so, either way, that scenario is what I think I'm most excited about in terms of a tailwind for risk assets that, quite frankly, hadn't needed it. And here we are in yields. I got rid of all my drawings on yield because I just want to observe structures. The horizontal levels, demand zones, supply zones are the most important when I can't get a good read on something. I go back and I say, looking at this trend, where did it start? What do you see in the character of the trend when it was a clear uptrend? You see at most one push, and then the second push, you get a change of character. Okay, uh, you see, you don't see these like one, two, three, four like high time frame moves, and the character changes. And why am I saying that in terms of market structure? Look at this move here, right? We have our pivot high here, September 2023. We had another attempt April, May, June 2024. Here we are here attempting to, I suppose, change the character of the structure, but it hasn't yet. And right now we're just looking at a lower high. So lower high, lower high. Could it be consolidating, something like that and wanting to break out? That's a really weak flag, right? Look at that pole. That is really, really weak. And so I don't know. We're gonna find out right now. This is just a sign. If this thing really wanted to break out and there was you would have expected to have seen it happen in this move, or catch a higher low, and then you make it in that move. Instead, we have a series of lower highs, lower highs, lower lows, lower lows. This is a downtrend until proven otherwise. So, what happens if, in fact, this downtrend continues and it resumes? That's what I'm most excited about. Okay, has Bitcoin needed this? What has this done for Bitcoin since September? No, it hasn't had any impact. So again, take that for what it's worth. Bitcoin. The exercise on Bitcoin is going to be pretty simple. You all know nothing has changed in terms of my high time frame. I think it's the most bullish chart in all of finance. There's nothing more that I need to say on the high time frame. This exercise is more about the accumulation channels of every impulse, early stage impulse we've seen since the lows in 2022. That's what we're going to do. We're going to look at the character of every single one. So forget this one right now. Let's just go all the way back. Go all the way back to our lows coming out of 2022 and our first impulse. Okay, our first impulse. We see these accumulation channels all the time. We had a clear channel the market respected. It fell out of the channel, one touch under the 20 EMA, back into the channel. Then it fell out of the bottom of the channel and it hit this demand zone. This early stage demand zone, this order block, it came back and tested it, okay? And then we got a reclaim of the 20 and then continuation higher. That's example number one. What's example number two? Our impulse coming out of October 2023. Remember when I was posting here saying I didn't expect any test? If anything, a test at the 35, 34 would be the lowest possible test I'd expect, which we never even got. Same concept. We have a demand zone, an order block right after the initiation of the big impulse, okay? We have a channel that the market respected, accumulation. It fell out of it. One attempt, nope, 20-day EMA, and then you kind of come back down, you check back around, you consolidate at it, and then you resume the uptrend. Didn't come back to challenge that demand zone. Okay, that's interesting. Great, who cares? Let's look at the third major impulse. That's where we are right now. And this is early stage expansion coming off the largest reaccumulation range ever in the history of Bitcoin, mind you. Bitcoin has never done a 3x off the lows and then accumulated in the 35% range for 7 months. That's never happened. It's a massive reaccumulation event. And so why I don't expect these major lower targets, the lowest I would expect would be something into this demand zone, okay? Something in that demand zone and then a continuation higher. But as you can see right now, we're still not even, we're not getting it. The character of this move looks a lot like the last move I just shared with you, where you've got this demand zone, this order block, which took the market up to 109, vertical accumulation channel. It falls out of it, rejection one, rejection two. Now it's kind of reclaimed this 20, and it's looking kind of similar to the character of that last move. And so I think there's one more actually I wanted to share from 2020, which was kind of similar. Let's see. Yeah. Here it is. One more. This is one from late 2020. Same concept. Early stage after large consolidation, early stage expansive movements. Same concept here, folks. What's the demand zone? That's the demand zone. Accumulation channel. 20, it fell out, reclaimed it, gets back in the channel, and it keeps going, right? Basically, what I'm illustrating are things that look bad to traders, technicals, right? You lose a channel, you lose a moving average. Market makers are trying to get rid of as many people as possible, shed the most speculators, traders, people with the least amount of conviction. And so they're going to make, in my opinion, I'm not a financial advisor, right? I don't take this as financial advice. As always, the things I talk about could go up, they could go down, they could go sideways. Just giving you my view on the market, and that's how I see it. So really garden variety type of move that's going on for Bitcoin, I'm looking for a lot higher. Potential downside scenario, again, I go through that in the members video, but that I think that if that were to happen, would be short-lived. If we look at others, the proxy for altcoins, this points to a high probability, potentially, or not a probability, but a scenario where you could argue this correction is over. And why do I say that? If we go back to this major impulse in 2024, March of 2024, that what I'm calling a 3, coming out of 1, right, A, B, C, 2, this minor 3 move, what happened? What happened? It retraced to the 618 in the tune of a 3-legged move, ABC to the 618 retracement, and then the market moved higher with the same energy that it came into the move, okay? 618, remember that, 618. Where are we now structurally on altcoins, specifically others? Okay, this is the move I'm looking at here in this third impulse. This is to look at what I'm claiming is this fifth impulse. And so very similarly, in this fifth impulse, I'm calling this 1, A, B, C, 2, 3, A, B, C. Where did the C hit that I'm claiming is C? The 50% retracement. So we had a 618 retracement, golden pocket on the last one. We hit the 50% retracement here, which is even lower. And we're, the market has now moved. Only thing I'm not crazy about is I see 3 legs here. I don't see impulsive unless this, gets us a little bit higher. But we've seen that before. I went through that extensively with the wave count on Bitcoin. But there's a chance this could be corrective, and I kind of went through that scenario in the members video. But either way, it doesn't matter, right? I'm not here. I'm not a trader. I'm not trying to trade this stuff. The market does the work. This is all guessing. And whatever happens in this scenario, whether I'm right here and we're coming out of this thing making a 1, 2, and then 3, 4, 5, or A, B, C, this is A, B, and you get one more stab down. That's always a possibility as well prior to the move that moves up. But just some more confluence there. Either way, I'm concerned with what I think the next major move is. And that I think is this, whether, we get down here or not, anybody's guess. I like the fact the market respected that 50% fib retracement, which is already deeper than the last one as I shared. All right, what's next after this? IWM. IWM, again, is just looking bullish. I think I did a video on this a couple weeks ago where I made I showed you some comparisons with previous impulsive movements with IWM. right now this is consolidating above a previous all-time high. That's a sign of strength from a Wyckoff perspective, where you had your spring, you had this creek, you jumped over the creek and you consolidated, and now I'm calling this a 1-2, and then a 1-2, potentially 3-4-5 is next. Bouncing right here at the 30 week, right where it should. Could this be a fake out and you got one more leg down? Sure, it could be. Okay, sure, it could be. But right now, I'm just sharing what's in front of us, and we have a 30-week market's respecting that. Market respected it back here. It breached it, but reclaimed it quickly here. Respected it back here. So since October 23, the market's respected that 30-week, and until proven otherwise, that's the posture. And now I ask you, how are Bitcoin miners and small caps that you cover or look at, how are they going to perform if that potentially were to unfold right there? So another reason why I'm really, really bullish. Gold, this is just more for the subscribers that asked me to include gold. There isn't a lot to update here, folks. When I first started covering gold was back here, if you all can recall, right? And I just called this a LPS backup, sign of strength, sign of strength. And the move I was looking for, the first part of it happened. And so this is just a consolidation. I don't know where it ends. I tend to think we've got one more leg down. I'd like to see, in terms of duration, I'd like to see the same duration. This was April to October. So far, we're 3 months. I'd like to see a few more weeks consolidating here before a move, but it doesn't always. Markets don't always do that. They don't have to be the same time. Theoretically, if something is moving parabolic or in parabolic fashion, the corrections get shorter in time as you move further along in time. So that's my view on gold. Ultimately, I think we resolve higher north of 3,000 towards the end of the year. So I hope everyone's having a great weekend. For the members, keep up your requests. When I can get to them, I will. And if I forget to or miss it, don't be afraid to post your request again. Thanks again. Have a great rest of the week or rest of the weekend, like I said, and we'll talk to you next week.